Hi everyone, welcome back to Real Estate Market Minute with Macross Group. Each week we break down the numbers that actually matter for buyers, sellers, and homeowners. Today we're covering 5 things: California's sales rebound, our tightening housing supply, mortgage rates crossing a key national threshold, a rise in foreclosure filings, and Gallup's latest word on how much Americans still trust real estate as an investment. California's housing market gained real momentum in June. Existing single-family home sales rose 4.1% from May and were up 6% from a year earlier, the strongest annual increase we've seen in 9 months. That growth broadened out too. 6 of the 7 major price segments posted double-digit gains, and all 5 major regions saw year-over-year increases. For the first half of 2026, statewide sales are up 1.9% versus the same period last year. One thing to watch though: renewed conflict in the Middle East has pushed energy prices and mortgage rates higher again, which could create some headwinds for the rest of the summer. On the supply side, inventory keeps tightening. Active listings were down 10.4% from a year ago, the 5th straight annual decrease, and the median home price has stayed above $900,000 for a 3rd consecutive month. Prices did ease 2.8% from May's record high, landing at a modest 0.4% annual gain, partly because fewer million-dollar homes sold compared to May. The lock-in effect is still keeping a lot of homeowners from listing, which is part of why supply has stayed this tight. Zooming out nationally, mortgage rates are back above 6.64%, a level that's historically cooled buyer demand, and we're seeing exactly that play out. Here's the weekly snapshot. Single-family inventory rose from roughly 844,000 to 859,000 homes. About 40% of listings have recent price cuts. New listings came in at 74,250, and weekly pending sales were essentially flat year over year. So supply is building while demand holds steady, meaning listings priced accurately from day one are the ones standing out. Now, foreclosures. U.S. foreclosure filings hit 227,548 properties in the first half of 2026, up 21% from last year and 28% higher than 2024. Foreclosure starts rose 18%, and bank repossessions rose 33%. Rising taxes, insurance, and everyday costs are cited as the main pressure points, even where the mortgage payment itself hasn't changed. It's described as part of a gradual return to more typical patterns after several unusually low years. On a brighter note, for the 14th year in a row, Gallup found Americans still rank real estate as the best long-term investment, ahead of stocks, gold, savings accounts, and bonds. Nationally, home prices are still rising overall, just more slowly than a few years back. Some local markets are seeing small dips, but Gallup notes those are minor compared to 5-year gains. For a lot of people, a home is still both a wealth-building tool and a place to build a life. So to recap, California sales are rebounding, supply stays tight, national mortgage rates are cooling demand, foreclosures are ticking up, and Americans still trust real estate more than any other investment. If you want to talk through what any of this means for your plans, reach out to Macross Group anytime. Our info is right here on screen. Follow us on Facebook, Instagram, YouTube, X, and LinkedIn for more updates like this one. Drop your questions in the comments, we read every one. And just a quick reminder, this video is for general informational purposes only and isn't legal, financial, or professional advice. Thanks for watching, and we'll see you next Wednesday.